with emerging technology. We have job losses, the winner takes all, the financial risks, social inequality, data use issues, privacy issues. And then on the environmental side, fintech in general, the ICT sector with a footprint as large as the aviation sector is already sector is already starting from a pretty low baseline. So this is something we need to factor in as well. And there was much hype around blockchain in particular and its energy consumption, but that's a very specific type of cryptocurrency mining. So I'll take us through a bit of that. So what I want to do in this session, which I wasn't sure how it was going to actually be formatted. I was hoping we would have sort of tables so we could do some workshopping, but I'll try and make it as a little bit interactive, but in this setting, I want you to feel free to ask questions or to comment, and I'll be asking a survey along the way. And this session is basically to introduce the evolution of green finance and offer you, hopefully, a bit of a look into different types of mechanisms and initiatives, such as green bonds, and to test a country guide to a green and sustainable digital finance landscape that we hope will anchor country benchmarking within the UN Secretary General's Task Force on Digital Finance, with whom we're a knowledge partner. So this is basically what I hope to accomplish in the next hour. I try to go shorter rather than longer. And that is, again, the introduction to the STFA, the evolution of green fintech, some use cases, and if you have other use cases, hopefully they will align or you can speak up on those. Blockchain itself, what I would like to know is how many people here are working on fintech? Okay. How many have actually worked within blockchain and know one or two? How many are with the ADB? All right. Other development banks? Other NGOs? Education? Business? Who am I missing within the sector? Banks? Sorry? The banks. I just said the banks. Central banks? Okay. And largely within the region. Anyone from without the region like me? Okay. We're going to have something in common then. So what the Sustainable Digital Finance Alliance is, it's a not-for-profit that was actually launched at the World Economic Forum in Davos in 2017. It took over a year to get it launched into something operational and functioning. And it was launched by Ant Financial Services from the Alibaba Group and the United Nations Environment Program. And it is a global partnership bringing together the digital finance business sector and stakeholders that basically had this idea to provide a platform for innovation around financial inclusion, committed to using digital technology, but also advancing green finance in lending, investment, and insurance, as well as the mandate to green fintech as it evolves. And so we have basically three pillars of work, or I guess in this triangle, three corners of work. Fintech policy instruments incentivizing sustainable fintech, advocating for integration of sustainability into national and regional fintech strategies, developing a global green fintech lab and sandboxes to enable high potential green fintech to scale. A State of Sustainable Digital Finance flagship report was already released, scaling of green bonds with the blockchain report, which we just released in Climate Week and which we're now piloting. Clusters of fintech hubs is the second part, as part of a global network, and we're developing with them a guide to map out green fintech globally. And we started with 3 hubs, and we will be scaling that up, as well as working with the UN Task Force officially as making this the benchmarking index globally. The fintech innovation scaling is the third part of what we do, and that's basically what we see actually happening on the ground with Ant Forest and Gcash, as well as other operational solutions to shift lifestyles and innovate capital market instruments for citizen investing. And with this, we hope to also publish impacts of carbon wallets, bottom-up approaches to climate change, and adapting those behavioral change triggers that we're seeing in Ant Financial and Gcash Forest, et cetera, to looking to other sectors or contexts, basically. So can we scale these up in other regions, other social political issue contexts as well? And so basically looking at creating a group where we can have the largest mobile wallets and groups basically focusing on scaling those up. The overall objective of the Alliance is to leverage digital technologies and innovations to enhance financing for sustainable development. That is the underpinning goal. But by doing this, by shaping international cooperation, promoting national ecosystems, and igniting market action, we hope to actually make that happen. But again, I'm coming from this from sort of a tech agnostic and neutral standpoint. I've created an ethics framework with the Rockefeller and Beek Center around blockchain and emerging tech, very much aware of the innovation landscape and the tensions there too on how we're actually scaling up innovations on the ground, and trying to use that Silicon Valley innovation model within development context. It just doesn't jive sometimes and actually can set us up for failure, over-pitching, overestimation, and I'll be addressing a bit of that as well. I should say that despite our very robust advisory board, and that we're actually located in Switzerland, I live in Washington, D.C., where it's only 1.5 of us actually doing all of this work. So we're a very lean team. We are a startup ourselves, so our response time isn't always great, but we have a fantastic community, and we have researchers and hubs that we bring in to actually collaborate and work with us. And we're funded largely from a MAVA Foundation grant and a few other small grants. So we shift also our, I'll be very frank, our shift on biodiversity is a big part of that because the MAVA Foundation in Switzerland is a big funder for us. So we actually have a new biodiversity challenge that is launched that will help us, again, map that ecosystem. So the core members actually are from different backgrounds and different geographies, and there'll be a few shifts underway in that regard as well. So these are some of the reports that we've already published and some of the initiatives that we've launched. So we've already contributed to advancing the dialogue and practice in green digital finance, including for the G20, under both Germany and Argentina's presidency, and we're under an umbrella group, working group there. And we have a number of other publications on digital green bonds, etc., for a global audience, and have been working with Ant Forest to actually scale that up into other regions as well, working with the CAFE group as well, the Central African Forestry Initiative. So I'm leaving here, going to Beijing to work on that. So basically by linking up this global community but bottom-up action, the idea is to de-risk capital markets by opening up the possibility to issue bonds, to do this type of behavioral work, to create a solution lab approach and work with lean consortia globally to scale this up and to actually demonstrate that A, it is happening, what are the factors that are making it successful, what are the barriers, and how can we address those. So that's basically the approach to work. We're also, as I said, a knowledge partner to the UN Secretary General's Task Force for Digital Financing of the Sustainable Development Goals. That's quite a mouthful to say. And we continue to work on the infrastructure side of things for that low carbon economy. And we're launched a global index that I'll speak about and hopefully will be able to bring forward to other people participating. So let's first discuss why we need to build a new purpose into a digital financial system, unless there are questions about the background of SDFA and our governance and all of this. So the numbers on these slides only tell one side of the issue. So we have this surge in negative yield bonds, including 7 trillion of people's savings, 300 trillion managed by financial and capital markets, over 12 trillion savings in private capital, earn negative interest rates because investors are seeking a safe place to store their money, and they're no longer receiving returns on that money. So this is one side of the coin. And on the other side of the coin, we have a situation where 1.7 billion adults still lack access to even a basic bank account. We have an underfunding of climate solutions and innovation. So there is this huge divide between the statistics that we're seeing. And the transition to the low carbon economy and supporting the Paris Agreement as well as the SDGs is estimated at 60 trillion in investments needed. And this number sort of grows or declines according to who's actually speaking. But the issue goes to why FinTech for SDGs? Can we scale up the dialogue on inclusion in FinTech? Can we innovate and integrate to include green finance in both sides of the coin? 1/3 of the world's arable land is jeopardized by land degradation. Half of the large aquifers beyond sustainability tipping point, that's a big factor. 17% of the world's population lack access to electricity. The statistics are enormous around any type of SDG in sector. But how can we integrate that dialogue with the solutions being deployed and with the FinTech side of things and the access side of things? Right now, the dialogue is happening in two separate spheres, and this is what we're trying to address. So the assets are there, but the barriers to sustainable financing are many, and we've outlined those in our G20 study in 2016, which you see here. We see movement on addressing these through the power of digital finance, but the barriers are quite enormous. So it goes from everything from data, lack of clarity, inadequate analytics, and we've seen global investment in financial technology increase more than 2,000%, from over 930 million in 2008 to more than 22 billion in 2015. And by the end of 2017, global FinTech funding has reached over 31 billion, including general mergers, acquisitions, venture financing, and private equity buyouts. But the power of digital finance could also have great impact, aligning the world's financial systems with the urgent objective of sustainable development and financial inclusion. So I think what I want to do is say, let's talk about what we mean by digital finance, because the need is there, the barriers are there. This is all very clear, but I think we need to focus in on what we mean by digital FinTech. What are the actual technologies behind this? Because in order to address these barriers, we have to understand what we're talking about and what level of development we're at. There's been a lot of hype around the emerging technology, but a lot of them are at their nascent stage. So what is the reality? What is the actual opportunity and the actual barriers? So the emerging tech and FinTech capacities include better metrics, so automated green scoring, automated data for carbon from the real economy, actual carbon market trading. We're now addressing fungibility of carbon credits, different GHG gases, different carbon markets, integrating those. That's one of the pilots I actually did previously with the World Bank on its carbon markets framework. We're also talking about green capital markets, the use and proof of impact reporting, and how this can actually be amped up and simplified and made much less costly. Smart contracts for the speed and cost savings are a big part of that. That includes IoT, blockchain, and other types of FinTech. And we can make everyone, through this, a green asset owner. That's the vision, but how close are we to doing that? And this is a big call with the youth movement too, being able to actually integrate people, not only in financial inclusion, but in terms of investing in sustainable development. So each one of you could actually invest in a green bond directly. And then the carbon light lifestyle, the Ant Forest and Gcash. This is another way that we're seeing FinTech actually working. So what we've seen is a lot of innovation in key areas, and the most mature part of the green FinTech markets, ranging from climate risk projections on assets to automated green scoring. The one thing is measurement, the other thing is using these measurements to innovate financial products. So we know that these exist, we have them functioning and working, but the integration part is really, really important and really significant. So I want to just walk us through a few use cases that you've probably very much aware of, or some that hopefully you're not. Myself have worked on a fuel transparency pilot. I've worked on a World Bank carbon markets pilot integrating the various types of technology. So we'll start with the very well-known use cases, the ant forest and the Gcash forest, where we see the mobilization of people in support of sustainable development and the fight against climate change, which goes to the core behavior and consumer habits. But this keeps them within that context, right? People are acting within their social political context, but it gives them a sense of actually focusing and lightening their carbon footprint. Gcash Forest here is helping to preserve one of the most biodiverse regions of the world and the biggest aquifer, I believe, in Manila for Manila's water supply. And Ant Forest has now 500 million users that use their smart app and make decisions based on that app to grow trees virtually that then become trees that are actually planted in a very viable, sustainable way through good metrics and forest programming. And that's a big essential part, is actually integrating this new technology with all of the hard-won legacy frameworks that we've worked on. The forestry frameworks, the sustainability frameworks, the guidelines for reforestation, all of this has to be integrated. And that's two of the good programs where we've seen the actual metrics matching. So this is actually one of the first ones around behavior. What we're seeing now are a lot of attempts to try and scale this up. What we are also seeing is a lot of attempts of taking this stuff, behavior, save your footprint, get credits for consumer goods, which kind of defeats the purpose. So, get these many points, you can buy a new surfboard. But it's made from recycled materials. So there's a lot of fluff in and around this, and we saw a lot of that get weeded out in the blockchain hype last year. So hopefully now what we're seeing is some of the good substantial programs work. But that whole sustainability and climate effort via your consumer behavior is very limiting, of course, but at least it's a step in the right direction, as long as we don't stay at, I think, at this level. And climate mitigation versus adaptation are also big points to consider. Another use case which we find really interesting is from one of our colleagues at Ing Bank, which is using different technologies to provide better metrics through big data. So AI and mobile technology are reducing the search costs of environmental performance for the promotion of green commercial real estate loans. And this is actually something that we're seeing in different sectors as well, not just related to real estate, not just related to European or Northern Scandinavian economies. This is about financing green commercial portfolios in that transition to the low carbon economy. And green commercial loans could be repacked into green commercial mortgage-backed securities, for example, or other bundling for sale to institutional investors through capital markets in order to help banks free up capacity. However, what's really important here is the labeling and monitoring of the greenness of the commercial real estate and other types of loans. These are fraught with information problems, asymmetry, barriers, and high costs of the capital itself. So digital finance is being used to address information disjoints and asymmetries here and lower the cost of capital for financing green commercial loans. So this is a really interesting step in the right direction. There's a case on Ing Bank that I'm happy to provide. I won't go into the details here, but basically, this is about how a borrower enters sort of basic certain information about their buildings, age, type of construction, floor area, etc. And there's an app that analyzes their portfolio and recommends the top 10 measures per building to lower energy costs and reduce CO2. So it's very much down to a user level. But at the same time, the scalability in terms of the markets and mortgages is quite unique. So again, starting with a small demonstrator and being able to scale that up is really important. So in the first year and a half of the collaboration, there were over $35 million in savings that was identified. And the cost of lending reflects the sustainability of the building. So the actual program is now up and running. It's about the scalability of this because, of course, the regulatory space and the metrics outside of the country dynamics are really important. So can this be scaled up against in different economies? That's a big question. Another one is MCOPA, which is Unleashing New Capital. It's developed a proprietary patent technology platform that combines embedded GSM and mobile payments to revolutionize asset financing in emerging markets. They basically manufacture and finance off-grid solar solutions. The last 2 years, we saw a great plethora of solar solutions, peer-to-peer trading, and different metrics. But some of the big issues and barriers were not necessarily about the bills, but about the regulatory space. So we actually did, in my former organization, we did an on-grid and an off-grid sandbox experiment. So in Sanso Island in Copenhagen and Copenhagen itself, we were able to demonstrate the possibility of peer-to-peer solar exchange to renewable energy certificates. But what was necessary there was to have the verified information from sensors, from other sources, and then have like a protocol that would ensure that once the energy produced was created this sort of token that got converted back into currency for the infrastructure, either the physical infrastructure or the digital infrastructure. And then that could be scaled up. But what we saw was a lot of these solar experiments happening in regulatory spaces which wouldn't allow them, either for solar to be off-grid or that notion of peer-to-peer trading, or the metrics themselves, the assumptions around the sensors, the assumptions around the IoT and the connected devices, the calibration, and also around the renewable energy certificates. I mean, a big problem we have around RECs and other types of credits is the fact that they can be double counted, sold twice, duplicated, replicated. These were the issues that really need to be solved in order for this type of scenario to scale up. So not only are we focused on, the technology could be built, but it's everything behind the scene that has to be addressed. Another one is Green Asset Wallet, which is basically lowering that cost of validating green investments through the Internet of Things. There are a lot of builds like this out there. They're trying to integrate all of these technologies to ensure that the validation is actually correct, that you can actually verify this. Now, what's interesting is even Gold Standard has actually sort of spun off Sustained Cert to address some of this type of verification and certification side of things, because certification of any type of asset or carbon market or certificate is really expensive and very time consuming. So what they recognize is a real need for that to be integrated with these technologies they're building up, because that's been a main barrier. So this combined with Sustained Cert and other type of capacities, it's going to help vamp that up. But again, what we saw was a lot of pitching, a lot of heavy development in that sort of innovation landscape of Silicon Valley, pitching us your great ideas, getting investors, and then hitting a wall, either through data, verification, or regulatory space. Another one was convergence finance. I'm just putting this up as another example of an online platform that generates blended finance data, intelligence, and deal flow to increase private sector investments in global development in emerging markets. And this allows investors to quickly search databases for credible deals that match their investment needs. But again, who's ensuring that those deals are credible? How is this happening? These are the factors that have to be coming into the systems as they get built out. The platform can unlock the sources of private sector finance, but again, it's about all of the data and the IoT and everything going into this in the first place. So this brings us back to, what do we mean by digital fintech? Is it just those platforms and those initiatives that we're seeing built out? It's actually much more. This is about innovation for the SDGs, new sources of finance, sustainable choices, but systems and data. And the systems and data is the bottom of that new pyramid. If these are not in place, and if the regulatory space isn't in place, then these are not scalable. There's other examples there on the right that the use cases are available that outline some of the other more successful initiatives. Now, this brings me to the barriers to scaling sustainable digital finance. We have some core barriers. We talk a lot about opportunities and the leveraging point around fintech, and that's a very positive approach, but the rapidly emerging practice in sustainable digital finance means we're all just very much at this early stage experience. It's very diverse, both in addressing different aspects of sustainable development and in the use of different technological ecosystems. And these are developing in silos, not only in terms of sector, but also in terms of technology and also in terms of competition with each other. So again, that interoperability, not just technological, but the interoperability that we see in the sustainable development landscape already, on initiatives on the ground and partners and NGOs, this is actually being perpetuated. So we have this marked disconnect between systemic development of the digital finance and the sustainable finance. So they are happening in two parallel paths that are not intersecting enough. So the emerging relevance of sustainable finance and is really linked to also digital governance and standards in order for interoperability to occur, at least on that level. So what we are suggesting here is sustainable digital finance regulatory sandboxes, global sandboxes focused on cross-border opportunities and risks, considering the energy needs of digital innovations, those can't be ignored, continued research and learning about digital finance potentials and practices, awareness and multi-party engagement. What I really find is that if we don't bring the stakeholders in, the actors across the value chains in for the actual problem definition, the solutions getting built out will hit a stop. They will not be able to scale. And that brings us to that notion of international cooperation to promote common standards, to address the shared risk and increase the cross-border sharing for scale. So the specific barriers are regulatory, technical,